For years, Bitcoin was the enemy of the US financial system, but now the US might actually use Bitcoin to save itself. Because Wall Street has a brand new idea. It's a hybrid Bitcoin treasury bond, and this could flip the US entire situation. And it's also going to open up the back door for billions of dollars that can quietly flow into Bitcoin. And at the end of this video, I'm going to show you how you can position yourself to profit from all of this. So let's dive in, how Bitcoin could help you to profit from the US debt crisis. So what if the US government started offering Bitcoin-backed bonds? Sounds like a wild idea, but it isn't. Because recently we saw this article from Forbes, and it announced BitBonds, the $2 trillion idea that could slash the national debt. And well, let's give you some context about how all of this works, because it's quite a novel idea. Not too many people are talking about it yet. It's being discussed by some very big players. So here you see an image of the US Treasury. The US Treasury has a $14 trillion problem. That's how much debt needs to be refinanced in the next 3 years. It's a lot of money. 14 with 12 zeros behind it. So much money that most people cannot even comprehend with their minds how much money that is. Now, there's another problem, which is that bond investors are getting nervous about the inflation and the weakening of the dollar. So this makes them wonder, is it even worthwhile to borrow the US money over the long term? So that creates a problem for the US Treasury because they have $14 trillion to refinance, but investors are wondering whether they should actually, store their wealth with them or maybe find some better alternatives. So this, let's dive a little bit into this deeper. So in 2025, about $9.2 trillion of the $36.2 trillion of national debt is set to mature, with roughly 70% of that 9.2 trillion, so 6.5 trillion, is maturing between January and June. And this isn't looking great for financing, for refinancing. What is refinancing? Let me explain it in very simple terms. Let's say that you have a loan and you need to pay back the principal amount on that loan. Or you need to pay the principal plus interest, but you don't have enough money to pay it. So then you go to the bank or to a central bank and you borrow money to pay off the old debt, and you take on a new loan that you then need to pay back in the next few years. That's basically what's happening. The US has trillions of dollars of debt, and it is not capable of repaying all of that debt right now. So it's taking out a loan in order to pay back that old money, and it's basically pushing the debt repayment forward. But if you're borrowing money, then you need to pay interest. And right now the interest is actually increasing. So here you see the 10-year US Treasury, the bond yield. So here you see the interest rate is going up, which is not great if you need to borrow money and the interest rate is going up. That means that in the future, you're going to have to pay higher interest or more interest. So that is not great because the US is already struggling, it's already drowning in debt, and on top of that debt, if they need to pay more interest, it's going to be painful. So one of the reasons why the US dollar wants the Fed to cut the rates is because they want to refinance the debt at a lower rate. But Fed Chair Powell doesn't want to play ball, so he's basically saying like, hey, no guys, I'm not going to do anything, I'm not going to cut the rates. First, we need to see a very significant economic blow or event happen. Otherwise, we're not going to do anything because we have a mandate, and our mandate with the Fed is to keep inflation low and keep inflation under control. And as long as it's not under 2%, we cannot print money. That's basically what is happening right now. US government or the US Treasury wants rates to drop. At the same time, the Federal Reserve doesn't want to drop the rates. So it's complicated, and there's so much debt that needs to be refinanced. So here is another tweet. This is insane. In 2025, $9.2 trillion of US debt will either mature or need to be refinanced. This is what we just discussed. The US now holds $36.2 trillion worth of government debt, meaning 25.4% of the total is set to mature. This is the real reason rates are rising. Let us explain. So here, what you see on this chart is an amount of 9.1 trillion that is going to mature, so that needs to be paid back in this year, 2025. And we're battling all of these increasing interest rates, so that's going to be a problem. And we were talking about the inflation rate. So again, what is the mandate of the central bank, the Federal Reserve, the central bank of the US? Their mandate is to make sure that there's enough jobs, and at the same time to make sure that inflation is under control. But right now, you see that the consumer price index in the United States has increased to 319 points. The annual inflation rate eased to 2.4% from 2.8%, and it was below market expectations of 2.6%, but it's not below 2%. And as long as it's not below 2%, the Fed doesn't really want to step in because, hey, why print money if inflation is still so high? Or why, lower the interest rates, which means that more liquidity will flow into the markets, meaning that, again, inflation will rise. So there's a paradox. It's a very complicated problem. So here you see the US 10-year Treasury is dropping, and that is not a great sign for investors. Foreign central banks are loading up on T-bills and they're selling bonds. So foreign governments are selling US bonds. And that's quite a big problem. So when people are selling bonds, then the yield or the interest rate tends to go up. But that is not great, guys. We don't want the interest rate to go up. That's going to create a very big debt problem for the US. So how do we fix this problem? Well, Van Eck, which is a very large, respected asset manager, they proposed a solution. And the solution is BitBonds. So what are BitBonds? Here's an article by Cointelegraph. It says Bitcoin treasury bonds may actually help the US to refinance its $14 trillion of debt. That's what a Van Eck executive says. So let's unpack this a little bit. So Sam Lyman is saying, imagine a financial instrument that could reduce the treasury's debt burden while giving investors risk-free exposure to the best performing commodity of the past decade. And this is the promise and ambition of BitBonds. So how I interpret all of this is right now the US needs to refinance a lot of money. At the same time, the trust of foreign governments in the US dollar is slowly degrading. And if there are less buyers because there's less trust, it's going to be very hard to refinance all of that money. So the US needs to come up with a new financial instrument which gives lenders enough trust and enough upside potential to make it worthwhile lending out money to the US. So BitBonds, if properly structured, could save the government $700 billion in borrowing costs, so probably meaning the interest, the additional interest that they need to pay at this higher rate over the next decade, while simultaneously stocking the strategic Bitcoin reserve. Interesting. So they can save money and they can expand their Bitcoin reserve. This is the biggest idea to come out of the Bitcoin policy in years, even much bigger than establishing the strategic Bitcoin reserve. Now, let's see how all of this works. So the BitBonds, the total issuance, $2 trillion. So approximately 20% of the refinancing needs need to be met through BitBonds. So not all of the money that they need to borrow, but they first want to go and borrow $2 trillion. So these BitBonds are $100. So every BitBond is $100. And with 10% of that, so $10, they're going to buy Bitcoin. So they're saying that this satisfies funding needs for government activities while adding Bitcoin to the strategic Bitcoin reserve. Okay? Then the interest is 1% annually for 10 years, which is a lot lower than the previously mentioned, 4%, 4.4, let's say 4.4%. So 1% is a lot lower, meaning that if they are able to refinance their $2 trillion of debt at this much lower rate, then they're going to pay a lot less interest. So much lower current interest rate, principal repayment guaranteed by the United States, independent of Bitcoin's price. Now, what is a return for the lender? So upon maturity, investors receive 100% of the Bitcoin upside up to 4.5%. So if Bitcoin increases with 4.5%, then you receive all of that 4.5% of yield. After this 4.5% is paid out, then it gets split 50-50 between the lender and the US government, meaning that the US government can retain 50% of the Bitcoin gains. So let's recap. BitBonds are an instrument where you can basically borrow your money to the US government, and they buy 10%. They use 10% of that money to buy Bitcoin, and along the way, you can also benefit from Bitcoin's price appreciation. So that's really interesting, because generally with bonds, you don't really have that kind of exposure, so there can be quite a significant upside potential to this BitBond for lenders. Here you see a tweet by John L. More people are talking about BitBonds, and for a good reason. It is one of the few remaining cards that the Trump administration can play to avoid a debt crisis. Because right now, interest rates are increasing, and it's not looking great. So you need to find new alternative ways to market these bonds and to attract new lenders that are willing to borrow you money against great terms. And Bitcoin seems to be a really great asset class that people are interested in right now, especially if you compare it to the performance of other traditional finance assets in the past 10 years. For example, the S&P 500. Look, if you compare this to Bitcoin's price appreciation, where is it? You can't even see it, okay? All of these other assets like S&P 500, gold, crude oil, 5-year treasuries, 10-year treasuries, if you look at the percentage gains, it's nothing compared to Bitcoin. So Bitcoin has been the best performing asset class of the past decade because it generated 230% of annualized returns for investors between 2010 and 2020. And there's barely any asset that can compete with it. And that's why this could be a very interesting asset to incorporate into such a BitBond kind of structure. Because, yeah, lenders still have a lot of upside potential. So why does this matter, guys? Because pension funds, sovereign wealth funds, and central banks could justify Bitcoin exposure through bonds, okay? Generally, these are very more risk-averse investors or risk-averse lenders, because a pension fund can take extreme risks with people's pensions, so they need to be a little bit risk-averse. But what this structure is saying, these BitBonds, is the US government is guaranteeing the repayment of these bonds. So basically meaning that you're going to get your money back with a nice interest, and on top of that, you get some upside potential with Bitcoin. So yeah, a lot of these big institutions, pension funds, sovereign wealth funds, and central banks might actually be interested in taking advantage of that play. So if you're looking at the different portfolio structures of different countries, so Australia is mostly allocated, and now we're talking about institutions. So Australia is mostly allocated to equities, some bonds, some other investments, and then cash. Canada, more 50-50 between equity and bonds, and then some other investments. Japan, a little bit of equity, a lot of bonds. Netherlands, a little bit of equity, a lot of bonds. Switzerland, 50-50 between bonds and equity. UK, a little bit of equity, a lot of bonds. US, a lot of equity, some bonds. And yeah, generally this shows that those large economies, they have a lot of exposure to bonds. So by creating these BitBonds, you can tap into a large sector of institutions that might be willing to lend money. Yeah, so here you see the size of the world's largest sovereign wealth funds. So the Norwegian government pension fund has $1.3 trillion under management. China's investment corporation, $1.3 trillion. The Safe Investment Company, $1 trillion. The Abu Dhabi Investment Authority, almost $1 trillion. The Kuwait Investment Authority, 800 billion. The GIC Private Limited, almost 800 billion. The Public Investment Fund of Saudi, 700 billion. The Qatar Investment Authority, 450 billion. So there is enough money, enough liquidity amongst these large funds, and they might have some appetite to invest in this new BitBond if the terms and conditions are right. So yeah, I think it could be a very innovative play for the US government to do this. Here is another tweet of 𝗗𝗶𝘀𝗰𝗶𝗆. He's saying, they'll sell you junk bonds and penny stocks, but not Bitcoin. $38 trillion in assets blocked, advisors can't even recommend it, and TradFi is playing catch up. But Bitcoin doesn't need permission. Be early. So what is 𝗗𝗶𝘀𝗰𝗶𝗆 talking about? Well, here you see some of the largest brokerages: Fidelity, Vanguard, Schwab, Morgan Stanley, UBS, JP Morgan, Merrill Lynch, Bank of America, Goldman Sachs, Wells Fargo, and Citigroup. And here on the right side, you see how much assets under management they have. So Fidelity, 15 trillion, Vanguard, 10.4 trillion, Charles Schwab, 10 trillion, Morgan Stanley, 7.8 trillion, UBS, 6 trillion, JP Morgan, 6 trillion, Merrill. So this just shows that in total, all of these financial institutions have $38 trillion under management. And here you see almost all of them allow Bitcoin exposure, except for Vanguard and Citi. Then some of them have limitations, like Morgan Stanley, UBS, JP Morgan. So basically all of the banks have some limitations on how much Bitcoin exposure you can have. Then how many of their advisors actively recommend Bitcoin? So Fidelity, yes. Charles Schwab, yes. Morgan Stanley, yes. And then all of these other banks, except for Wells Fargo, don't. So imagine if all of these institutions allow exposure, have no limitations, and have their advisors to recommend Bitcoin. Well, then there could be a lot of money that can get exposure to Bitcoin. And this can be through different vehicles. You know, you can own Bitcoin outright, or you can deposit it at the bank and they can hold custody, or through Bitcoin ETFs, or through Bitcoin bonds, BitBonds. So that those all have different risk parameters, risk return parameters, but I believe there are different financial instruments for different types of investors, you know. But in short, there's a lot of money that hasn't been tapped into, and which, if only a small portion of that would flow into Bitcoin, that will already mean that Bitcoin will go up significantly in price. So the US might be using Bitcoin's brand and momentum to keep the debt machine running. At this point, they almost have no other opportunity, or no other option. The other option is to refinance at a very high interest rate. Well, if they can save a few billion, it is already interesting, but they can save around $700 billion by enacting on this BitBonds play. And at the same time, they're also building up their Bitcoin strategic reserve. Here is a tweet by Spencer Hakimin. He's saying, people are not appreciating what a horrendous message the bond market is sending us. Yields are down 20 basis points. Yields are 20 basis points higher than November, back when we had plus 3% GDP growth. We're having a substantial growth scare with stocks down minus 20% from peaks, and yet bonds have gotten zero bid whatsoever. Our credibility is shot, and you will pay for it for decades to come. Exactly. So the US government is in a very messed up situation where they need to refinance this debt, and a few $1 trillion of debt. And if they do this at this higher interest rate, then they're going to settle up future generations with a lot of debt and interest repayments, or they can find this new, they can make use of this new innovative financial instrument in order to raise a bunch of money and then refinance their debt. So I'm really curious to hear your thoughts in the comments below. Do you believe that BitBonds might actually happen in real life, or do you believe that this is just some kind of speculation of the crypto community that will never really come into fruition? Hey, if you enjoyed watching this video, I put a lot of time and effort into researching and putting them together. Do me one quick favor, smash the like button if you got good value out of it. For me, it's a great mechanism to understand what kind of videos you like or not. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to post regular videos just like this one to help you to make sense of everything that's going on and to help you to position yourself for maximum profits in this market. All right, thanks for watching. Peace out, take care, and I will see you in the next one.